If you're a parent, you could be missing out on $2,800 per child that the government wants to give you, but only if you know exactly how this new permanent child tax credit works. In the next few minutes, I'll break down everything you need to know about the expanded child tax credit that just became law, who qualifies, how much you can actually get, and the crucial timing details that could make or break your refund. Welcome to Financial Area, where we decode complex financial changes into actionable insights that put money back in your pocket. If you find this valuable, hit that like button and subscribe for more money-saving tax strategies. A major legislative change just went into effect that's about to put thousands of dollars back into the pockets of American families. The child tax credit has been completely overhauled, and the numbers are staggering. We're talking about a maximum credit of $2,200 per child, but here's what makes this different from every other tax credit you've heard about. This isn't just another temporary relief measure that disappears after a few years. This new child tax credit is permanent. There's no sunset provision, which means families can finally plan their finances with certainty, knowing this benefit will be there year after year. But let's break down what this actually means for your wallet. The $2,200 per child is split into two parts, and understanding this split is crucial. Up to $1,400 per child is what's called refundable. This means even if you owe zero taxes, you still get this money as a direct refund. The remaining $800 per child is non-refundable, which can only be used to reduce your tax bill to zero. Now, who actually qualifies for this full amount? The income thresholds are generous. If you're single, you can earn up to $200,000 and still get the full credit. If you're married, filing jointly, that threshold jumps to $400,000. Above these amounts, the credit gradually phases out, but the vast majority of American families will qualify for the full benefit. Your child needs to meet the standard qualifying criteria. They must be under 17 at the end of the tax year, be your son, daughter, stepchild, foster child, or sibling, and must have lived with you for more than half the year. These requirements haven't changed, so if you've claimed the child tax credit before, you'll likely qualify for this expanded version. The permanence of this credit cannot be overstated. Unlike previous versions that came and went, this gives families stability. You can budget knowing this money will be there. You can plan major purchases, and you can make long-term financial decisions with confidence. Let me walk you through exactly how this works with real numbers, because this is where most people get confused. Let's say you're a married couple with 2 children, and you owe $1,000 in taxes for the year. Your total credit would be $4,400. That's $2,200 per child times 2 children. Here's how the math works. First, the non-refundable portion kicks in. That's $800 per child, so $1,600 total. This gets applied to your $1,000 tax liability, wiping it out completely. You still have $600 of non-refundable credit left, but you can't get that as a refund. It's just gone. But now comes the refundable portion, $1,400 per child, which equals $2,800 total. This entire amount comes to you as a refund, regardless of your tax situation. So your total benefit is $1,000 in eliminated taxes, plus $2,800 in refunds, giving you $3,800 in total value. Compare this to the old system where the same family would have received roughly $1,825 in total benefits. We're talking about more than doubling the financial support for families. This is a massive difference that will have real impact on household budgets across America. But let's look at different scenarios. If you're a single parent with 1 child and you owe $500 in taxes, you'd get $2,200 in total credit. The non-refundable $800 would eliminate your $500 tax bill, and you'd receive the full $1,400 as a refund. Your total benefit would be $1,900. For families with multiple children, the numbers get even more impressive. A family with 3 children would see a total credit of $6,600, with $4,200 of that being refundable. Even if they owed several thousand in taxes, they'd likely see a substantial refund. Higher income families need to understand the phase-out mechanics. Once your income exceeds those thresholds I mentioned earlier, the credit doesn't disappear immediately. It gradually reduces as your income increases. The exact phase-out rate means that even families earning significantly above the thresholds may still receive some benefit, though it will be less than the full amount. Now, here's the crucial timing information that every parent needs to understand. This expanded credit applies to tax years 2025 and beyond. This means you won't see these benefits when you file your 2024 taxes in early 2025. You'll have to wait until you file your 2025 taxes, which typically happens in early 2026. I know this timing can be frustrating, especially when families are dealing with current financial pressures, but understanding this timeline is essential for proper financial planning. Don't expect to see this money in your next refund. It's still more than a year away. This brings up one of the biggest missed opportunities in the current legislation. Previous versions of expanded child tax credits included monthly advance payments. Instead of waiting until tax time to get your money, families could receive a portion of the credit each month throughout the year. This provided much more immediate relief and helped families manage their budgets more effectively. The current version doesn't include this monthly payment option, which means families have to wait for that lump sum at tax time. However, there's speculation that this could change. Since Congress has already approved the funding, it's possible that executive action could implement monthly payments without requiring new legislation. The mechanics of how this could work are already established from previous programs. The IRS has the infrastructure to make these payments, and the eligibility criteria are clear. Whether this happens depends on political will and administrative decisions that could come at any time. For now, though, families need to plan around receiving this benefit as a lump sum during tax season. This actually requires some strategic thinking about your finances. If you're expecting a $2,800 refund per child, you might want to adjust your withholding throughout the year to better manage your cash flow. Some families might prefer to have less money withheld from their paychecks, knowing they'll get a large refund. Others might want to continue their current withholding pattern and use the refund for major expenses or savings goals. There's no right or wrong approach. It depends on your family's financial situation and preferences. Record keeping becomes even more important with this expanded credit. Make sure you have all the necessary documentation for each qualifying child: birth certificates, social security numbers, and proof that they lived with you for more than half the year. Having these documents organized will make tax filing smoother and help you avoid any delays in receiving your refund. It's also worth noting that this credit will be adjusted for inflation going forward. This means that unlike previous versions that lost value over time, this credit will maintain its purchasing power. The $2,200 maximum will increase with inflation, ensuring that families continue to receive meaningful support even as costs rise. The broader economic impact of this change cannot be ignored. When families have more disposable income, they spend it. This money goes toward groceries, clothing, school supplies, childcare, and countless other expenses that support local businesses and stimulate the economy. Research has consistently shown that child tax credits are one of the most effective ways to reduce child poverty and support family stability. But beyond the economics, this represents a fundamental shift in how we support families. The permanence of this credit means that raising children in America just became more affordable, and parents can plan for the future with greater confidence. Looking ahead, there will likely be ongoing discussions about further improvements to the credit. The missing monthly payment option is an obvious area for enhancement. There might also be discussions about increasing the credit amounts, adjusting the income thresholds, or expanding eligibility in other ways. As with any tax law, future changes are always possible. Congress could modify or even repeal the credit, though the political reality is that taking away popular family benefits is extremely difficult. The permanent nature of this credit makes it more likely to survive political changes than temporary provisions. For families planning their finances, the key is to stay informed but not to overthink it. This credit will be there for tax year 2025 and beyond. You can count on it when making financial decisions, but keep an eye on any news about potential modifications or enhancements. The bottom line is this: if you have qualifying children, you're looking at receiving significantly more money from the government, starting with your 2025 tax return. For a typical family with 2 children, we're talking about an additional $2,800 in refunds compared to previous years. That's real money that can make a real difference in your family's financial situation. This expanded child tax credit represents one of the most significant improvements to family financial support in years. The combination of increased amounts, enhanced refundability, and permanent status creates a foundation that families can build upon. While there's always room for further improvement, this is a major step forward that will benefit millions of American families for years to come. Make sure you're prepared to take full advantage of this credit when it becomes available. Keep your records organized, understand the timing, and plan accordingly. Your family's financial future just got a little brighter, and every parent should understand exactly how to maximize this benefit. If this breakdown helped clarify how the new child tax credit will impact your family, make sure to like this video and subscribe to Financial Area for more insights on tax changes and money-saving strategies. We'll keep you updated on any developments with this credit and other financial opportunities you won't want to miss.